Onto the fixed income space in Nigeria. Pressure on the Naira intensified today at the money market as the local currency breached the 162 Naira band despite dollar sales support from the Central Bank of Nigeria. Now, on the flip side, the cost of lending among banks fell broadly as liquidity conditions continue to improve at the interbank market. For more on Nigeria's fixed income and money market space, Kubi Momo, head market risk at UBA, joins me now for that. Thank you so much, Kubi, for joining us.
Hello, sir.
Well, let's kick off with the Naira. Well, we've seen the currency stable in the last couple of sessions at around 161 Naira. Yesterday, it hit 162, and today we saw it breaching that band, despite sales from the CBN at its wholesale Dutch auction system. Can you tell us where this renewed pressure is coming from?
Esther, what this means for the fact that CBN didn't fully sell the amount on offer and we're seeing the Naira under pressure at the interbank, it means that we're having demand from transactions that are not eligible for the central bank window. And those kind of transactions tend to be remittances of investments. So what we're thinking is that we're still seeing the reversals of portfolio flows that we started to see sometime at the beginning of July. That's what we're reading from what we're seeing now. Like you said, the Naira touched 162 yesterday and closed at 162.1020. or so it's holding firm above the 162 levels.
Okay, but is that still a true reflection of the strength of the Naira or how weak the Naira is, as it were, looking at the interbank rates?
In some ways, yes, it is. It's a good thing. I mean, at least from the CBN side, we know that for manufacturers, for those bringing in visible goods and manufacturing goods, we know that they are still getting access. I mean, there's some comfort for them. The central bank is, I mean, maybe slightly below budget. If you look at the last 6 to 7 WDAS sessions, in maybe only 3 of them have they done the full 300, maybe 3 or 4. So for central bank, they're running slightly under budget, but it shows that in the external economy, the transactions that have been excluded from that window are putting some pressure on the rates, because there were some oil major sales during the week, although maybe not the significant ones, but there were some, and even then we're still seeing the Naira track up of 162.
Now, this base that did not qualify the CBN's forex auction, is this something that is it temporary? How long do you think it's going to last? And when can we see the Naira going back to somewhere around 160, 161?
160, I'm not sure. 161, yes, we'll probably see that maybe by the time we have one of the oil majors coming into the market. That tends to soften the market. Those are cyclical sales, and anytime we see them coming in, the market tends to soften and go back to the 161 levels. What we think we're seeing, it depends on how long this trend persists. Maybe a lot of investors going out, or maybe one particular investor with significant demand, but we'll see that play out through the end of the week.
Okay, so in the time being, you see the Central Bank of Nigeria keeping its foreign auction below, or somewhere, or at least not above $300 US, 300 million US dollars.
As long as they're not selling fully what they're putting on offer, they have no reason to increase it. They would increase it if there was significant pressure from the transactions that are eligible. Well, from what we're seeing, that isn't the case, because we have a sale of 263 against an offer of 300 million for today.
Okay, let's talk about interbank liquidity conditions. We saw rates falling broadly today by around 2%, core money coming down from around 12% to around 10%, and we do have some maturing OMO bills. I think that should be tomorrow. So would you say that liquidity is robust right now at the market?
Well, it's certainly improved. Government statutory allocations came in earlier in the week. We closed last week, maybe I think at the 14% levels, and now we're back to 10.5. So yes, there's liquidity in the system. There's enough liquidity, to support the interbank trading. That's why you're seeing rates pretty low. The maturing T-bills, yes, will bring money in. One of the significant things that we've noticed ever since the change in the cash reserve requirement, whereby 50% of PSG funds are sterilized, central bank hasn't really been coming to the market to offer the open markets or the OMO bills. Apart from the primary auction sessions, we haven't been seeing that extra mop-up. They haven't needed to. And now that rates are low, they will just be watching the situation to make sure that the market isn't overwhelmed with liquidity. Okay,
now, Kubi, finally, quickly, let's talk about yields. Still hovering at around 13%. Any chance of that going higher? And we do know that some pension fund administrators have actually been stepping up demand at the market.
We actually think there's a chance that yields will go lower. Again, because we haven't seen any significant activity from central bank in the open market operations, we're seeing just the primary auctions. There's interest, like you said, from the PFAs, and there's interest again from some of the banks. I think the banks also have some interest in the short end for when they have extra liquidity coming in. So there's interest from the banks, there's interest from the PFAs, and there's less supply. So yields will probably stay where they are or trend. Maybe they just tick a bit lower at the next auction.
And could we have like a figure, how high could they go or how low could they go, whatever be the case?
I think, well, you know, they've hovered between, we've seen a hovering for the shorter tenors, they've hovered at about 11. For the maybe 365, they've hovered at 12.5, maybe 12.7. They will probably still hover. We're talking about maybe 20 to 50 basis points, you know, up or down. That's what we've seen depending on liquidity. Again, one thing I should mention, the next cash reserve cycle kicks in next week. So depending on how banks are positioned, that will also affect liquidity in the market, and it will have an impact on the treasury bill yields.
Okay, let's go back to the interbank market, looking at treasury bills, OMO bills maturing tomorrow. When do you think we could likely see more T-bill auctions or perhaps more maturing bills?
The next auction is next week. That's a primary auction. And that's when we'll see another direction. The direction we've seen, I think, from the past two auctions is downward, if I'm not mistaken, a small, maybe 5 to 10 basis points downwards, 3 auctions to 2 auctions ago. And then between last auction and the one before that, significantly more, I think up to 50 basis points depending on the tenor. So that has been the trend. That's what we expect to see. But then again, it will depend on how liquidity plays out when the next cash reserve cycle kicks in, which is next week. Okay.